So, hello everyone, very good evening. Today I am going to revise income from salaries at CA interlevel. Income from very important, definitely one question will come in September 2025 examination from salaries. Easily you can expect 5 to 7 marks from salary. Now we will start discussing income from salaries. First of all, what are the sections covered under the head salaries? Section 15 to 17. Yes, Aditya, good evening. Welcome for this live revision session of income from salaries. Charging section is section 15. And what is the method of accounting? Salary is always taxable on due basis or receipt basis, whichever is earlier. I received salary in advance. It is taxable on payment basis. The day on which I receive advance salary, in that month only it is taxable. For example, on 5th May, salary is due, but employer did not pay salary. Even though salary is not paid, the day on which salary becomes due, on that day, salary is taxable under the head income from salaries. So either due or receipt basis, whichever is earlier. Yes, good evening Sinduri. Good evening Saranya. Good evening Srinivas. Whatever the benefits received by employee are there, all benefits, whether monetary or non-monetary benefits, all benefits are taxable to the employee under the head income from salaries. The important thing is there should be principal servant relationship. Only if there is principal servant relationship, out of that relationship, if any benefit is received, then only that benefit is taxable under the head income from salaries. If there is principal to principal relation, then whatever the benefit received, that is taxable under PGBP. So very important thing is employer-employee relation. Only when there is employer-employee relation, then only benefit is taxed under the head salaries. Only when there is principal servant relation. Are you able to understand? The employer can be either past employer or present employer or future employer. Still, benefit received is taxable under salaries. Either from full-time employment or from part-time employment. If any benefit is received, that benefit is also taxable under the head income from salaries. The key important thing is employer-employee relationship. For example, salary received by MLA or MP. There is no relationship of employer-employee in between government and MLA or MP. That's why salary received by MLA or MP is taxable under income from other sources. Similarly, if independent directors receive any remuneration or sitting fees, that is not taxable under salaries. If director comes if he signs the employment contract and if he works as managing director or whole-time director under employer-employee relationship, then if any benefit is received, that benefit is taxable under the head income from salaries. Similarly, employee died. After death of employee, wife of employee received pension. See, in between employer and wife of employee, there is no employer-employee relationship. So pension received by wife of employee is not taxable under income from salaries. It is taxable under IFOS. Are you able to understand? Next. Remuneration received by partners. We have already discussed if partners receive remuneration from partnership form. There is no employer-employee relation in between partnership form and partner. So whatever the remuneration interest received by partner from partnership form is there, that is taxable to the partner under the head PGBP. It is not taxable under the head income from. Next. See, salary includes 5 components: basic payments, perquisites, retirement benefits, welfare contributions, allowances. All these 5 components together we call as gross salary. Sir, in booster series, taxable perquisite was not explained. Uh, Aditya, like salaries was made in two parts, part one, part two. Whole salaries was also uploaded in my YouTube channel, 5 hours video. In that, I clearly explained perquisites. Please watch that video. Okay, I did not skip any topic from salaries in booster video. Almost all topics are covered. Now, basic payments, perquisites, retirement benefits, allowances, welfare contributions. All these five together we call as gross salary. From gross salary, we can claim deductions under section 16. There are three deductions. Standard deduction under section 16(1)(a), entertainment allowance, profession tax. Whatever standard deduction is there, this is allowed both under default tax rates as well as under optional tax rates. Under default tax rate, standard deduction is 75,000. Under optional tax rate, standard deduction is 50,000. Entertainment allowance, profession tax are also allowed as deduction, but only under optional tax rates. Okay. So now let us discuss five components. Basic payments. Basic payments means nothing but salary, fees, bonus, commission. All these are basic payments. Basic payments are fully taxable. No exemption is available for basic payments. So basic salary fully taxable. If any advance is received, okay, advance is taxable on receipt basis. Okay. Next, if any fees is given, bonus is given, that is also fully taxable. If any commission is paid, whether that commission is as a percentage of turnover or fixed commission, commission is also fully taxable to the employee. Are you able to understand? Am I audible clearly? Please confirm. Now, we will discuss retirement benefits. First, gratuity. See, all these retirement benefits along with problem I clearly explained in booster video. If you have any ambiguity, you can watch booster video. This is revision lecture. Okay. In revision lecture, I will summarize the concept and explain to you. Okay. Otherwise, there is no difference between booster and this revision lecture. If you have already listened booster lecture 5 hours, then this 1.5 hour or 2 hours revision will be sufficient. Gratuity. See, if gratuity is received during the service, then that gratuity is fully taxable both for government employees as well as for non-government employees. However, if gratuity is received at the time of retirement, then at the time of retirement, gratuity received by government employees is fully exempt. If gratuity is received by other employee, then there are two cases. See, during the service, gratuity received fully taxable both for government employees as well as for non-government employees. After service, that means after retirement, gratuity is received. Government employee fully exempt, non-government employee partly exempt. Total gratuity will not be exempt. So if gratuity is received by other employee, then two cases are there. Whether that other employee is covered under Payment of Gratuity Act or not. If other employee is covered under Payment of Gratuity Act, POGA, then separate calculation is there. If other employee is not covered under Payment of Gratuity Act, separate calculation is there. So if other employee is covered under Payment of Gratuity Act, then exemption is actual gratuity received or statutory limit 20 lakhs or 15/26 into last drawn salary into years of service. Salary for this purpose. See, employee covered under Payment of Gratuity Act, then salary definition is basic plus any DA. Any DA means basic plus DA forms part of retirement benefits plus DA not forms part of retirement benefits. Are you able to understand? Next, years of service. There is difference. Years of service, completed years of service. For example, employee worked for 8 years, 9 months. Employee worked for 8 years, 9 months. See, part of the year is greater than 6 months. Na? So, years of service will be 9 years. Completed years of service will only be 8 years. That means when you are calculating completed years of service, you should take only completed years. If there are any months, ignore the months. But when you are calculating years of service, if there is any part of the year, here part of the year is 9 months, which is greater than 6 months. So you will round off to next 1 year. Are you able to understand? Next, I will tell another example. Let's say employee worked for 8 years, 4 months. See, part of the year is less than 6 months. Na? So years of service 8 years, completed years of service also 8 years. Are you able to understand? For example, let's say employee worked for 8 years, 6 months, exactly 6 months. Then also you should not do round off. Years of service is 8 years, completed years of service is also 8 years. Are you able to understand? So this is the calculation. Employee covered under POGA, Payment of Gratuity Act. What are the steps for calculating exemption? The steps are actual gratuity received or statutory limit 20 lakhs or 15 by 26 into last drawn salary into years of service. Salary for this purpose is basic plus NEDA. Are you able to understand? Next. Employee not covered under Payment of Gratuity Act. One point here, 15 by 26 in case of normal employees. If employee is seasonal employee, in place of 15 by 26, you will consider 7 by 20. Are you able to understand? Employee not covered under Payment of Gratuity Act. If employee is not covered under POGA, not covered under Payment of Gratuity Act, then also exemption will be allowed in 3 steps. First 2 steps are common. Statutory limit 20 lakhs, actual gratuity received, or half 1 by 2 into last 10 months average salary. Okay, last 10 months average salary preceding the month of retirement. Employee retired in August. Ignore August. From July onwards, last 10 months. So 1 by 2 into last 10 months average salary into completed years of service. Completed years of service means what? You will ignore months. If part of the year, if there are any months, you will ignore the months. Next, salary for the purpose, for this purpose is basic plus DA forms part of retirement benefits plus commission as a percentage of turnover. Are you able to understand? Next, for the purpose of gratuity, government employee means central government employee, state government employee, and members of civil service and defense service. That means IAS, IPS, those who are working in army, navy, defense, they are also treated as government employees for the purpose of gratuity. Another important thing, in 2021, you claimed gratuity exemption 6 lakhs. In 2025, you received gratuity. Gratuity received is, let's say, 18 lakh rupees. Now, you will calculate exemption. Now, while calculating exemption, let's say, actual gratuity is 18 lakhs. Statutory limit. How much is statutory limit? Statutory limit is 20 lakhs. But whatever 20 lakhs statutory limit is there, that is for lifetime, not for each year. Already in your life in 2021, you have claimed 6 lakhs gratuity exemption. Now statutory limit is not 20 lakhs. 20 lakhs minus 6 lakhs, statutory limit will be 14 lakhs. Are you able to understand? So very simple. In earlier years, if you have claimed gratuity exemption, whatever the amount of gratuity that you have claimed as exemption in earlier years is there, excluding that, you have to calculate the statutory limit for second time. So for the first time, statutory limit for gratuity exemption is 20 lakhs. For second time, statutory limit for gratuity exemption is 20 lakhs minus exemption claimed in the first case. Are you able to understand? Very careful. ICAI is testing this point, so you should not commit mistake. Okay. Next, we will discuss pension. See, if any pension is received, pension is classified into 2 types: uncommuted pension, commuted pension. Uncommuted pension is like monthly pension. Okay? Monthly pension is fully taxable. Whether it is government employee or non-government employee, monthly pension is always fully taxable. Commuted pension. Commuted pension means what? You are receiving monthly pension, but certain amount of monthly pension you gave away for giving away certain component of monthly pension, you received lump sum pension. That lump sum pension we call as commuted pension. Are you able to understand? What do you mean by this? Commuted pension. Let's say I am receiving every month 15,000 per month pension. I suddenly want 4 lakh rupees. What I have done, I have like commuted 60%. So 15,000 into 60% means what? 9,000 I gave up. From next month onwards, I will not get 9,000 per month pension. I will get only 6,000 per month pension. Now, I commuted 9,000 pension, right? For commuting 9,000 pension, I am getting lump sum pension of 4 lakh rupees. This lump sum pension of 4 lakh rupees we call as commuted pension. Are you able to understand? If commuted pension is received by government employee, fully exempt. If commuted pension is received by non-government employee, then exemption will be allowed. You can see commuted pension received by government employee, fully exempt. Commuted pension received by other employees. Other employees means what? Non-government employees. Then you have to check. If employee is not receiving gratuity, exemption is equal to 1 by 2 of commuted value of full pension. Very simple. Employee already receiving gratuity. He will already claim gratuity exemption. Na? So, lower exemption will be if employee is receiving gratuity. If employee already receives gratuity, lower pension exemption. 1 by 3rd pension exemption will be allowed. If employee is not receiving gratuity, he will not claim gratuity exemption. As he do not claim gratuity exemption, higher pension exemption will be allowed, which is 1 by 2, half 1 by 2 exemption will be allowed. But here the thing is, how much? See, he is commuting 60%. Na? For commuting 60%, he is receiving 4 lakhs. If 100% is commuted, how much he would have received? Okay, 4 lakhs divided by 60 into 100. He would have received 6,66,667. This will be considered as full value of commuted pension. Are you able to understand? On this full value of commuted pension, you will apply 1 by 3 or 1 by 2. Are you able to understand? So, whatever the commuted pension received is there, on that you should not apply 1 by 3 or 1 by 2. You should do gross up. On grossed up amount, on full value of commuted pension, you need to apply 1 by 3 or 1 by 2. Are you able to understand? For the purpose of pension, government employee means central government, state government, local authority, even statutory corporation. RTC is the Road Transport Corporation. It is also a statutory corporation. Even statutory corporation employees are also treated as government employees for the purpose of pension exemption. Are you clear? Let's say employee died. After death of employee, pension is received by family members. It is not taxable. It is exempt. Okay. Now, employee retired. Family members of employee received pension. In that case, pension received by family members is taxable under income from other sources. Next, leave encashment. Leave encashment, that means let's say I have given 16 leaves, but I utilized only 10 leaves, 6 leaves were unutilized. Whatever unutilized 6 leaves are there, na, for those 6 days also I came to office and I worked. So for those 6 unutilized leaves, they will pay salary to me. Whatever the salary paid for unutilized leaves is there, that we call as leave encashment. Leave encashment is fully taxable whether the employee is government employee or non-government employee. So if leave encashment is received during the service, that means employee was not retired. Employee did not retire. During the service only, employee received leave encashment, that is fully taxable. If leave encashment is received after retirement, termination or death, Then if leave encashment is received by government employee, fully exempt. The perks of government employee. Okay, he receives gratuity after retirement, fully exempt. He receives commuted pension after retirement, fully exempt. Government employee receives leave encashment after retirement, fully exempt. But if leave encashment is received by non-government employee after retirement, then also exemption is available, but total is not exempt. Exemption will be calculated in 4 steps. First 2 steps easy. Actual leave encashment received or statutory limit 25 lakhs. Third step, 10 into 10 months average salary. Salary for the purpose of leave encashment is basic plus DA forms part of retirement benefits plus commission as a percentage of turnover. So, and you will take last 10 months average salary preceding the date of retirement. Let's say employee retired on August 5th. Ignore August 5th. From August 4, you will calculate last 10 months average salary. You will multiply last 10 months average salary with 10. That is step 3. Step 4, cash value of unutilized leaves at the time of retirement. How to calculate this? Let's say organization gives 40 days leaves in an year. You should not consider 40 days. 40 days or maximum allowed under income tax 30 days. Whichever is lower means you will take 30 days per financial year. So this 30 days should be multiplied with completed years. Thereby you will arrive at leaves given to the employee. Okay. So from leaves given, you will reduce leaves availed during the service. Okay. From leaves given, you will reduce leaves availed. After you reduce leaves availed, you are going to arrive at unutilized leaves. Whatever the unutilized leaves are there, convert into number of months. So number of months of unutilized leaves must be multiplied with last 10 months average salary. Thereby you are going to arrive at cash value of unutilized leaves at the time of retirement. Out of these 4 steps, whichever is lower will be allowed as exemption. Is it clear? Next. Same concept. Maximum leave encashment exemption allowed is 25 lakhs. In 2023, I already claimed leave encashment 4 lakh rupees. Again, leave encashment came in current previous year 2025. Now, again, statutory limit is not 25 lakhs. Already earlier I claimed 4 lakhs leave encashment exemption. Na? So in current previous year, statutory limit is 25 lakhs minus already claimed exemption 4 lakhs. Only 21 lakhs is my statutory limit for 2025 previous year. That means very simple, maximum leave encashment exemption that an employee can claim in his lifetime is 25 lakhs. Are you able to understand? Next, retrenchment compensation, VRS compensation. What do you mean by retrenchment compensation? See, if employer removes employee on an immediate basis without any prior notice, then as per labor laws, retrenchment compensation is required to be paid by employer to employee. Retrenchment compensation is expenditure to employer, same amount is income to the employee. So whatever retrenchment compensation received is there, from that you can claim exemption. Sir, how much is the exemption? Exemption will be statutory limit 5 lakhs or actual retrenchment compensation received or 15 by 26 into last 3 months average salary into years of service. Out of these three, whichever is lower should be considered. So very simple, statutory limit 5 lakhs. Actual retrenchment compensation received. At the same time, last 3 months average salary preceding the date of retirement. So ignore today, last 3 months average salary you need to take. Salary for this purpose is basic plus DA form, a basic plus any DA. DA forms part of retirement benefits plus DA not forms part of retirement benefits. VRS compensation. If any VRS compensation is received, then exemption will be allowed in 3 steps. Step 1, actual VRS compensation received. Step 2, statutory limit. See, for retrenchment compensation, for VRS compensation, for these two compensations, statutory limit is same. Statutory limit 5 lakhs. Step 3 has two sub-steps. First sub-step is for completed years. Last drawn salary into completed years of service into 3 months, or second subsection for future years, balance years, remaining months of service into last drawn salary, balance number of months into last drawn salary. In third sub-step, whichever is higher you will take. In these three sub-steps, whichever is lower you will be allowed as exemption. See, third step is there. Completed years into 3 months into last drawn salary, or future years, remaining number of months into last drawn salary. Out of these two sub-steps, whichever is higher you will take. Out of three sub-steps, whichever is lower will be allowed as exemption from VRS compensation. Are you able to understand? That is the calculation. And salary for this purpose is DA basic plus DA forms part of retirement benefits plus commission as a percentage of turnover. And we will consider here completed years of service. Here I said completed years of service. Completed years of service means what? If there is any part of the year, we will ignore part of the year that should not be rounded off. We will take only completed years. Are you able to understand? Next, see, entire retirement benefits I gave in a single chart for your quick understanding. You can, like before going to examination, you can see this retirement benefits chart. It will be highly useful to you. Okay. Next, we will discuss perquisites. So, are you clear with retirement benefits? Comment. Next, we will discuss perquisites. Whatever the perquisites are there. Perquisites means what? Benefits given to employee. Perquisites can be given either at free of cost or at concessional rates. Perquisites can be given either in the form of cash or in the form of kind. So, perquisites means additional benefits given to employee over and above the normal salary. Sir, what is tax treatment of perquisites? See, some of the perquisites are fully taxable, some of the perquisites are exempt, not at all taxable. Some of the perquisites are taxable only in the hands of specified employees. That classification I have given here. Which perquisites are fully taxable? Which perquisites are fully taxable for all employees? That I have given here. Which perquisites are taxable only in the hands of specified employees? That I have given here. Which perquisites are not at all taxable? That means these perquisites are fully exempt. That chart is also given here for your quick understanding. You can go through this chart. Now, sir, who is called as specified employee? Three conditions. To call an employee a specified employee, first condition, like out of these three conditions, conjunction is or. That means if any one of the conditions are satisfied, he will become specified employee. He is not required to satisfy all the three conditions. Are you able to understand? So first condition is he should be employee come director. So if a person is employee as well as director in the company, then he will be considered as specified employee. Director can be full-time director, part-time director, executive or non-executive, any type of director. He should be employee come director, then he will be considered as specified employee. Or second case, he should have substantial interest in the company. That means what? He should have beneficial ownership of greater than or equal to 20% in the company, then he will be treated as specified employee. Condition 3, his salary should be more than 50,000 rupees, then also he will be considered as specified employee. Out of these three conditions, if any one of the conditions is satisfied, he will be considered as specified employee. But while calculating the limit of 50,000, four benefits are to be ignored. They are not to be considered. Non-monetary benefits should not be considered in calculating limit of 50,000. Monetary benefits which are exempt, they are also to be excluded. They are also not to be considered. Employer contribution to provident fund, that is also to be excluded. And deductions under section 16. After excluding these four benefits, whatever the balance salary is there, if it is more than 50,000, then he will be treated as specified employee. And while let's say employee is working with three employers, whatever the salary received from all the employers is there, that should be considered while calculating the limit of 50,000 rupees. Now we will discuss rent-free accommodation. So are you ready? Shall we discuss rent-free accommodation? Rent-free accommodation. Very, very important. At the same time, it is complex also. Now, this is overview. Rent-free accommodation. If it is received by government employee, how it is taxable? If it is received by non-government employee, then two cases are there. If accommodation is owned by employer, if accommodation is hired by employer. Third case, if hotel accommodation is provided, that means like a hotel is given to employee for the purpose of stay, then how it is taxable to the employee. Next, if more than one accommodation, let's say employee works in Hyderabad office as well as Bangalore office. In Hyderabad one house is given, in Bangalore one house is given. So if two accommodations are given, how that benefit is taxable to the employee. If any temporary accommodation is provided, how it is taxable, that is also we will discuss. So rent-free accommodation we will discuss in 5 steps. Step 1, rent-free accommodation received by government employee. If any rent-free accommodation is received by government employee, then government will fix the benefit, whatever the benefit license fees, whatever the license fees fixed by government is there, that is the taxable value to the employee. So in examination, rent-free accommodation for government employee, you need not think much. License fees will be given in the question. Whatever the license fees given, that is taxable to the employee. Case 2. Rent-free accommodation is received by non-government employee. Let's say I am working in Infosys. Infosys wants to give a house to me. Now Infosys has two options. Either Infosys can give its own house to me, or Infosys can take one house on rent and rented house can be given to me. So whenever rent-free accommodation is received by non-government employee, two cases will arise. Rent-free accommodation given can be employer own accommodation or employer hired accommodation. Now, if accommodation is owned by employer, then what will we check? the place where accommodation is provided, in that place the population we need to check. Let's say like accommodation is given to me in Mangalgiri. I am doing job in Vijayawada, but accommodation is provided to me in Mangalgiri. In which place you will consider the population? Not, you should check the population not in the city where employee is working, but in the place where accommodation is given. So the place where accommodation is given, in that place if population is less than or equal to 15 lakhs, then taxable value is equal to 5% of salary. If population is greater than 15 lakhs up to 40 lakhs, taxable value 7.5% of salary. If population is greater than 40 lakhs, then taxable value is equal to 10% of salary. So whenever accommodation is owned by employer, then we like that means what? Employer is giving his own accommodation to employee. Infosys is giving its own accommodation to me in Mangalgiri. So when employer gives his own accommodation, you have to check the population, not in the place where employee is working, but in the place where accommodation is given. Population less than or equal to 15 lakhs, taxable value 5%. Population greater than 15 lakhs up to 40 lakhs, taxable value 7.5%. Population greater than 40 lakhs, taxable value is equal to 10% of salary. Are you able to understand? Next, taxable, like this is for unfurnished accommodation. Unfurnished means that means only house will be given, furniture will not be given. If furnished accommodation is given, that means what? Along with house, furniture is also provided. Then taxable value of unfurnished accommodation, to that you will add value of furniture. If furniture is owned by employer, you will consider 10% of the cost. Careful, here you should not consider written down value. Okay, very important. For calculation of depreciation, you will consider written down value. In that flow only, here also you will apply 10% on written down value. You should not apply like that. If furniture is owned by employer, taxable value to the employee is equal to 10% of cost. If furniture is hired by employer, then taxable value is equal to actual hire charges paid by employer. Are you able to understand? Now, where accommodation is taken on lease or rent by employer, that means employer is not giving his own accommodation. Infosys took one flat on rent. Whatever the flat taken on rent, that is given to me. So if rented accommodation is provided by employer, then taxable value is equal to actual hire charges paid by employer or 10% of salary, whichever is lower. For providing me rent free accommodation, if any amount is collected from me, whatever the amount recovered from employee is there, that should be reduced. Only balance amount will be considered as benefit received by employee. Are you able to understand? Next, furnished accommodation, same concept. For unfurnished accommodation, you will add value of furniture. If furniture owned by employer, you will add 10% of cost. If furniture hired by employer, you will add actual hire charges. Okay. Where accommodation is provided by any employer, whether like hotel, if hotel accommodation is provided, hotel accommodation is always furnished accommodation. In hotel, he will not give only one room and he will not ask you to sleep on the floor. So hotel accommodation is always furnished accommodation. If hotel accommodation is provided to the employee, let's say employee is shifting from Hyderabad to Mumbai. As employee shifting from Hyderabad to Mumbai, if temporary hotel accommodation is provided up to 15 days, it is not at all taxable. That means at the time of transfer of employee, up to 15 days if hotel accommodation is provided, not at all taxable. More than 15 days if hotel accommodation is provided, then it is taxable to the employee. Sir, how much is taxable? Actual hotel accommodation, actual charges paid for, actual hotel charges paid or 24% of salary, whichever is lower will be taxable. Are you able to understand? If more than one accommodation is provided, let's say employee working in Chennai, Bangalore, two accommodations are provided. If two accommodations are provided, we will calculate perquisite for Hyderabad house property accommodation. We will also calculate perquisite for Bangalore house property accommodation. Wherever the value is low, we will consider that value only for first 90 days. So for first 90 days, whichever is lower, that accommodation value is exempt. Sorry. for first 90 days out of Hyderabad or Bangalore, wherever lower perquisite value is there, that is only taxable. After 90 days, both accommodations perquisite is taxable. Are you able to understand? So there is one guy, psycho gaming for you. May I know your actual name? Now, temporary accommodation. See, if any temporary accommodation is provided, if temporary accommodation is provided in remote area or on-site or onshore or offshore, that means temporary accommodation is provided in the sea or temporary accommodation is provided in the sand near the sea. So if temporary accommodation is provided in such places, then the temporary accommodation is not at all taxable. The temporary accommodation is fully exempt. Next important point, if any rent-free accommodation is provided to judges, High Court or Supreme Court judges, that is also not taxable. That is also fully exempt. But only thing is they should pay taxes under optional tax rates. Are you able to understand? You can see rent-free accommodation provided to High Court or Supreme Court judge is not taxable. Only thing they are required to pay taxes under optional tax rates. Let's say rent-free accommodation is given for 12 months, but employee used rent-free accommodation only for 8 months. Now, for how many months rent-free accommodation is taxable? Rent-free accommodation is taxable only for 8 months. So, simple logic, for how many months rent-free accommodation is utilized by employee? Only for that period rent-free accommodation is taxable. Next, salary for the purpose of rent-free accommodation. Salary includes all amounts, basic, every amount that is taxable, that is included in calculation of salary, excluding 5 items. While calculating salary only for the purpose of rent-free accommodation, you should exclude 5 items. What are they? DA not forming part of retirement benefits, employer contribution to provident fund, interest on provident fund. You can see employer contribution to provident fund and interest thereon, and whatever the perquisites are there, those are to be excluded. Next, if any allowances are there, exempted allowances you need to exclude, and retirement benefits are to be excluded. So see, we have discussed, if employer provides his own accommodation, 5% of salary or 7.5% of salary or 10% of salary, hotel accommodation 24% of salary. For calculating rent-free accommodation, you should calculate salary amount separately. While calculating that salary amount, you should exclude 5 items. You will exclude DA not forming part, you will exclude exempted allowances, you will exclude value of perquisites, and you will exclude retirement benefits, you will exclude employer contribution to provident fund and interest thereon. Excluding these 5 items, whatever the balance salary is there, on that balance salary you will apply 5%, 7.5% or 10%. Are you able to understand? So this is all about rent-free accommodation. Another important point, see, if same accommodation is provided for more than 1 year, let's say in Hyderabad, one flat is given to me by Infosys. Same flat is also given for next year. So in that case, we will consider inflation also. So next year, we will calculate rent-free accommodation as per normal provisions or inflated rent-free accommodation. Whichever is lower is taxable. Are you able to understand how to calculate inflated rent-free accommodation? First year's rent you will take using index numbers, you will calculate inflated rent-free accommodation. So either inflated rent-free accommodation or taxable value of rent-free accommodation as per normal provisions, whichever is lower is taxable to the employee. Is it clear? Like, if you have listened my booster series, you would have understood this concept through this revision. If you do not understand, along with problem I have explained in booster series, once watch it, hardly it will take some 10 to 15 minutes. Okay. Rent-free accommodation, very, very important from examination point of view. Don't skip. Shall I explain further? So your name is Boomesh, Psycho Gaming. So are you clear with rent-free accommodation, everybody? Domestic servant facility. See, if any domestic servant is provided to employee, that is also benefit to the employee, right? That benefit is taxable to the employee. If domestic servant is appointed by employer, salary is also paid by employer, then that benefit is taxable only for specified employees. If domestic servant is appointed by employee and salary is paid by employer, then that benefit is taxable for all employees. Sir, how much benefit is taxable? Whatever the salary paid to domestic servant is there, that amount is taxable to the employee as benefit received, perquisite received. If any allowance is given, domestic servant allowance is fully taxable. Okay, next. Gas, water, electricity. Very simple. If gas connection, water connection, electricity connection, these connections are in the name of employer and bills are paid by employer. That benefit is taxable only for specified employees. If gas connection, water connection, electricity connection are in the name of employee and bills are paid by employer, that benefit is taxable for all employees. Are you able to understand? Taxable value is equal to actual bills paid by employer. If employer provides a gas facility or electricity facility from his own resources, in that case taxable value to the employee is equal to manufacturing cost incurred by employer. HP gas provides 2 cylinders to each employee. Now employee is getting cylinders at free of cost. Taxable value to employee is equal to manufacturing cost of cylinder to HP gas. Are you able to understand? Next. Education facility. Two things. If education facility is provided by employer in his own educational institution, Indian Railways is providing education facility to railway employee in railway school. That means what? Education facility is provided in employer own educational institution. In that case, benefit is taxable only for specified employees. If educational facility is provided in private educational institution, then in that case benefit is taxable for all employees. In that case, whatever the fees paid in private educational institution or other than employer own educational institution, whatever total fees paid is there, total fees paid by employer is benefit received by employee and it is taxable to the employee. Are you able to understand? If education facility is provided in an educational institution owned or maintained by employer, I already told you. If education facility is provided in employer owned educational institution, in that case, benefit is taxable only for specified employees. Sir, how much benefit is taxable? See, whatever the, for example, education facility is provided by Indian Railways in railway school to railway employee. If there is any similar school just like railway school in that locality, whatever the fees charged in similar school is there, that should be taken. So taxable value is equal to fees charged by similar school in the same locality. However, if education facility is provided to wife, brother, sister, grandchildren, then taxable value is equal to fees charged by similar educational institution in the same locality. If education facility is provided to employee own children, then exemption is available. If fees charged in similar educational institution is up to 1000 rupees, that benefit is not taxable. If fees charged is more than 1000 rupees per month, in that case, two options. Either total fees charged by similar educational institution is taxable or fees charged by similar educational institution in excess of 1000 rupees per month. Either that excess is taxable. Are you able to understand? Sir, for domestic servant, whether we have to consider salary paid by employer or cost to employer for such facility, we need to consider salary paid by employer to domestic servant. Such salary paid is benefit received by employee. Next, if any education allowance is given, then education allowance is not fully taxable. From education allowance, exemption is allowed up to 100 rupees per month for a maximum 2 children. Are you able to understand? Next, if any hostel allowance is given for employee children, hostel allowance is also not fully taxable. From hostel allowance, employer can claim exemption up to 300 rupees per month. From hostel allowance, employee can claim exemption up to 300 rupees per month for a maximum of 2 children. Next. Medical facility. Now, if medical facility is provided in employer own hospital, Indian Army soldier, he got shot by a bullet. Medical treatment was provided in army hospital. So if medical facility is provided in employer own hospital or hospital maintained by employer, that facility is not at all taxable to the employee. Next, if medical facility is provided in either government hospital or hospital approved by commissioner or principal chief commissioner, or if any medical facility is provided relating to COVID-19, for these three things, if any medical facility is provided by employer, that medical facility is not taxable to the employee. Next, employer paid medical insurance premium for employee. When I used to work in Infosys, 5 lakh rupees medical cover is there. That means if something happens to me, up to 5 lakh rupees medical bill will be paid by Infosys. Do you really think Infosys will pay? No, Infosys will pay medical insurance premium in my name. Whatever the medical insurance premium paid by Infosys is there, that is benefit received by me, but that benefit is not taxable to me. Are you able to understand? Next, if any premium paid for personal accident insurance policies of employee, then also it is not taxable to the employee. In any other case, let's say I took treatment in a private hospital, that medical bill is reimbursed by employer, that is fully taxable to employee. Are you able to understand? So other than government hospital, employer own hospital, if treatment is provided in any other private hospital, that benefit is fully taxable to the employee. If medical facility is provided outside India, whatever stay expenditure, medical expenditure, these two expenses are exempt up to amount specified by RBI. If benefit received is more than amount specified by RBI, then excess is taxable. Next, if any traveling expenses for medical facility outside India, if those traveling expenses are reimbursed by employer, then we will check gross total income of employee. If gross total income of employee is less than or equal to 2 lakhs, then exempt. If gross total income is greater than 2 lakhs, then it is taxable to the employee. Another important thing, whatever stay expenditure, traveling expenditure, this benefit is available only for patient and one attendant along with patient. If for second attendant also, if traveling expenditure and stay expenditure is reimbursed, that is fully taxable for second attendant. Are you able to understand? Next, if any medical allowance is given, medical allowance is fully taxable. Next, car facility. So the challenging thing in salaries is studying perquisites only. Each perquisite will be so lengthy, yet we cannot compromise. Car facility, I will explain very simple way. If car is owned by employee, expenses, petrol expenses, maintenance expenses are also paid by employee, then there is no benefit received by employee. Am I correct or not? I own the car, I am paying petrol bills, I am paying maintenance bills, I am using car for my personal purpose, I am using car for office purpose, I'm using car for both purposes. Did I get any amount from employer? I did not get any amount from employer. In that case, no benefit is received by me. In this case, nothing is taxable. So car owned by employee, expenses paid by employee, and car is used for any purpose. No benefit is received by employee. In those cases, car benefit is not at all taxable. So car owned by employee, expenses are paid by employee, car is used for these three purposes. It is not at all taxable. Are you able to understand? If car is owned by employer and expenses are paid by employer, expenses are paid by employer. In that case, see, whenever car is used for office purpose, am I getting any personal benefit? I'm not, like employee do not get any personal benefit, right? So whenever car is used for official purposes, it is not at all taxable. So whenever it is used for official purpose, it is not taxable at all. So out of 12 cases, in 6 cases, it is not at all taxable. Next, whenever car is used for personal purpose. Let's say Infosys purchased car, Infosys is paying petrol bills, and I am using car for my devotional trips, personal purposes. In that case, total benefit is received by me na. So taxable value is equal to 10% of cost of car, because car belongs to employer. 10% of cost of car plus actual expenses paid by employer plus driver salary paid by employer, if any. Are you able to understand? Now, car is owned by employer, but expenses are paid by employee, and car is used for personal purpose. Very simple. In case 1, car is owned by Infosys, expenses are also paid by Infosys. I am getting two benefits. I am getting car benefit, I am also getting expenses benefit. Am I correct or not? In case 2, car is owned by Infosys, but fuel is paid by me. I am getting only car benefit. As I am getting only car benefit, taxable value is equal to 10% of cost of car. Are you able to understand? Third case, car is owned by employee, but expenses are paid by employer. Here I am purchasing car Honda City, but expenses are paid by employer. Now see, anyhow I purchased car from my own money, but expenses are paid by employer. I am using car for my personal purposes. Whenever expenses are paid by employer, that is benefit received by me. I am getting expenses benefit. Whatever actual expenses paid by employer are there, those actual expenses are considered as benefit received by me. If driver salary is paid, that is also considered as benefit received by me. Are you able to understand? Car is owned by employer, expenses are paid by employer, and car is used for both purposes. Car owned by employer, expenses paid by employer, car used for both purposes. In that case, see, I am using car for office purpose, I am also using car for personal purposes. Okay, exactly I cannot bifurcate how much I use it for personal purpose, how much I use it for office purpose. Then Income Tax Act said it gave default amount. If it is a small car, then taxable value to me is 1800 per month. If it is big car, taxable value is 2400 per month. Sir, when we call a car as small car, if cubic capacity is less than or equal to 1600 cc or 1.6 liters, then it is small car. If cubic capacity is more than 1600 cc, then it is a big car. If driver is also provided, then additionally 900 rupees per month is benefit taxable to me. Are you able to understand? Car owned by employer, but expenses paid by employee, and car is used for both purposes. Infosys purchased car. I am paying fuel expenses. I am using car for office purpose as well as personal purpose. Here I am getting only car benefit. Expenses are paid by me. So taxable value, if it is small car, 600 per month. If it is big car, 900 per month. Are you able to understand? If additionally driver is also provided, additionally we will add 900 per month. Last case, car is owned by employee, expenses are paid by employer, and car is used for both purposes. I purchased Innova Krista. Fuel expenses, maintenance expenses are paid by employer, and I am using Innova Krista for office as well as for personal purposes. Here, car is owned by me, but expenses are paid by employer. As employer is paying expenses, I am getting the expenses benefit. So here what I will do, whatever expenses paid by employer are there, that should be taken. Expenses met by employer are to be considered. From that, I will reduce office purpose. Office purpose are to be reduced. Thereby, we will arrive at taxable value for personal benefit. Are you able to understand? So for office purpose, how much we need to reduce? For office purpose, if it is small car, you will reduce 1800 per month. If it is big car, you will reduce 2400 per month. If driver is also provided, then you will reduce 900 per month. After reducing office purpose car expenditure, you will get personal purpose car expenditure, which is benefited to the employee and it is taxable to the. If two or more cars are given, let's say CEO is there. For CEO, three cars are given. Out of three cars, one car will be considered as used for office purpose and personal purpose. Remaining two cars are considered as used for personal purpose and accordingly they are taxable. Next. Other than car, let's say motorbike is given. Motorbike facility. If motorbike facility is used completely for office purpose, then it is not taxable. If motorbike is given and petrol expenses are also paid by employer, in that case, out of total petrol expenses, we will reduce 900 per month for office purpose. Balance petrol expenditure is benefit received by employee and it is taxable to the employee. Are you able to understand? Next, if car facility is provided from office to home, home to office, then the car facility is not at all taxable. It is fully exempt. If car facility is provided to High Court judges or Supreme Court judges, that car facility is also fully exempt, but they should be paying taxes under optional tax rates. Okay. So next, interest-free loan. — 17 to 7A. Can you ask the concept? Now, interest-free loan. If interest-free loan is given, let's say I wanted to purchase one flat. If I go to Axis Bank, the rate of interest is 12%. Employer gave housing loan to me for 7% only. For Axis Bank, I need to pay 12%. For employer, I need to pay 7%. 5% interest is saved to me, right? That 5% interest is considered as benefit received by me. That benefit is taxable to me. So interest rate benefit is also taxable to the employee. However, if amount of loan given by employer is petty, if amount of loan given is up to 20,000, interest rate benefit is not taxable. Next, if loan is given for treatment of specified diseases, then even though loan is greater than 20,000 rupees, still interest rate benefit is not taxable to the employee. Are you able to understand? In remaining all cases, interest rate benefit is taxable. Sir, how to calculate interest rate benefit? You need to take market interest rate. Sir, what do you mean by market interest rate? SBI interest rate as on 1st April of the previous year. That will be considered as market rate interest rate. From that you will reduce interest actually paid by employee. Thereby you are going to get Thereby you are going to get interest rate benefit. That interest rate benefit is taxable to the employee. Another important thing, interest rate benefit should not be calculated at the end of every year. Interest rate benefit should be calculated at the end of every month. So at the end of every month, whatever the outstanding balance is there, on that outstanding balance you need to calculate interest rate benefit. Are you clear? Next, movable assets. See, Hershey, sir, please cover section 17, subsection 2, clause 7, clause 7a. See, I cannot explain just like that. I can explain that concept only through an example. Basically, that concept will be covered in regular class. It is hard. The question from such concept hardly comes. Okay, so you need not worry about that concept. Movable assets. See, if movable assets are given to employee for usage purpose, if laptop and computer are given to employee for usage purpose, even though laptop and computer are given for personal purpose, it is not taxable to the employee. Taxable value is equal to 0. So if any asset other than asset covered under, that means other than car, sorry, other than laptop and computer, if any other asset is given to the employee, then taxable value to the employee is equal to, so if for example, fridge is given to employee, fridge is not car, sorry, fridge is not laptop, it is not computer. If fridge is given to employee, if fridge is owned by employer, taxable value to the employee is equal to 10% of actual cost. If fridge is hired by employer, then taxable value is equal to actual hire charges paid by employer. Are you able to understand? Now, transfer of assets or duration. Now time is 8:40. I will take class till 9. Till if anything is pending, tomorrow morning I will take 45 minutes or 1 hour. Is it fine for you? Please comment. Now, see, asset owned by employer is transferred to employer. Now, let's say I will tell one small example. Asset cost is 8 lakh rupees. Now, this asset is basically car. It was purchased on 1st April, not 1st April, let's say 10th June 2022, sold to employee on uh, 2nd December 2024. So, whatever the completed years are there, for completed years, you need to reduce the depreciation. Now, let's say 10th June 2022 is there, 2nd December 2024 is there. How many completed years are there? Completed years of service is equal to 10th June 2023, 10th June 2024. Completed years, 2 years. So what you will do, you will take cost 8 lakh rupees, you will reduce depreciation. Sir, what is rate of depreciation? For computer and laptop, you will reduce depreciation 50% return on value method. For car, you will reduce 20% return on value method. For other assets, you will reduce 10% SLM. Okay, so you will reduce depreciation for 2 years. On written down value method, how much will be the depreciation? 8 lakh into 20%, 1.6 lakh, 6 lakh 40,000 into 20%, 1 lakh 28,000, 5 lakh 12,000. Let's say it was sold to employee, for example, sold for 3 lakhs. You will reduce sale value. How much is sale value? It is sold to employee for 3 lakhs. What is balance? Balance is 2 lakh 12,000. This is taxable value to the employee. Are you able to understand? So you will consider cost. You will reduce depreciation for completed years. Very, very important. Don't calculate depreciation proportionately. Only for completed years you will reduce depreciation, and you will also reduce sale value. Thereby you are going to arrive at taxable value of the. Tomorrow morning timing, sir. So at what time you are comfortable? Tell me. That time only I will take. Next, gift. If cash gift is received, fully taxable. If gift is received in the form of kind, let's say I received watch as a gift from my employer. If value of watch is less than 5,000, not at all taxable. If value of watch is more than 5,000, then two options. If value of watch is 8,000, total 8,000 is taxable, or in excess of 5,000, 3,000 is taxable. Two alternatives are possible. So we will have class at 11 a.m. Now, next is free or concessional food. See, if any food is provided by employer, that is also benefit received by employee. Na? That benefit is also taxable to the employee. But whatever tea, snacks that are provided are there, tea, snacks are minimum courtesy. That benefit is not taxable to the employee. If any lunch, dinner or food is provided by employer, then that benefit is taxable. So if tea snacks are provided during office hours, it is not taxable. If any food and non-alcoholic beverages are provided, then if they are provided in a remote location, okay, remote area or offshore installation, in that case also it is not taxable. However, if food and non-alcoholic beverages are provided in regular office, in that case you need to check value of food. If value of food is up to 50 rupees, not taxable. If value of food is more than 50 rupees, then up to 50 rupees it is not taxable. In excess of 50 rupees it is taxable. Are you able to understand? Next, if any vouchers are given, that means what? Every month 30 vouchers are given. Using 30 vouchers I can take food. If value of voucher is up to 50 rupees, not taxable. If value of voucher is more than 50 rupees, in excess of 50 it is taxable. Okay, and that when it comes to voucher, that benefit is available only under optional tax rate. Next, sweat equity shares or specified securities. If any sweat equity shares are given to employee, so like that is also benefit received by employee. Na? Let's say Infosys share price is 240 rupees today. Infosys allotted me sweat equity shares only for 190 rupees. Now there is benefit. If I wanted to purchase Infosys share in open market, I need to pay 240. If I purchase sweat equity share, I need to pay 190 rupees. So difference between 240 and 190, 50 rupees, that is benefit received by me. That benefit is taxable to me. Are you able to understand? So here, how to take a fair market value of Infosys share. Are you able to understand? That is the question. And another question is, let's say I applied for sweat equity shares today. They are allotted after 5 days. On which date fair market value I need to consider? I need to consider fair market value on the date of exercising the option. So fair market value on the date of exercising the option minus amount paid by employee, that benefit will be considered as benefit received by employee. Are you able to understand? Sir, how to calculate fair market value? If they are listed shares, then on the date of exercising the option, whatever the average price is there, average price means what? Opening price plus closing price divided by 2. That is called as average price. Average price on date of exercise of option, that will be taken as fair market value. Are you able to understand? For example, I am Infosys allotted sweat equity shares to me. Infosys shares are traded on Bombay Stock Exchange as well as National Stock Exchange. So Bombay Stock Exchange, National Stock Exchange, in which stock exchange higher Infosys shares are traded on the date of exercise of the option. I will choose that stock exchange. In Bombay Stock Exchange, 8,000 Infosys shares are traded. In National Stock Exchange, 12,000 Infosys shares are traded. I will consider National Stock Exchange. On National Stock Exchange, whatever 12,000 uh, on, on National Stock Exchange, on the date of exercising the option, average price I will take as fair market value. Are you able to understand? For example, on the date of exercise of option is exercised on Sunday. On Sunday, market is not available. On Saturday, you have to take previous day. On Sunday also, market is not available. You have to take immediately previous day, Friday. On Friday, whatever the closing price is there, that closing price will be considered as fair market value. And if shares are unquoted shares, then merchant banker or registered valuer is going to calculate the fair market value. Free or concessional tickets. Hold on. Traveling, touring, etc. I wanted to go on a tour. So if tour package is offered by employee, then whatever the tour package expenses paid by employer are there, that is benefit received by employee. I wanted to go to Kulu and Manali. Infosys booked me tour package worth 60,000 rupees. Now I went to Kulu Manali, enjoyed there and came back to Hyderabad. So I enjoyed it free of cost, but Infosys paid tour package cost 60,000 na, that is benefit received by me. However, let's say if employer Make My Trip is providing Kulu Manali package to its own employee. In that case, if employer himself provides tour package to employee from employer own resources, in that case, taxable value to employee is equal to fees charged by another operator in the market for same type of tour package. Let's say Agoda is there. Agoda is charging for Kulu Manali trip 65,000. That is benefit taxable to Make My Trip employee. Are you able to understand? Free or concessional tickets. That means what? Let's say free flight tickets are provided to Indigo employee. So for airline employees and for uh, railway employees, if free tickets are given, that is benefit received by employee, that benefit is not taxable to employee. However, for bus, okay, any other mode of transport, example road. See, let's say RTC is providing free tickets to employee. That benefit is not exempt to the employee. That benefit is taxable to the employee. Sir, how much benefit is taxable for providing same uh, for providing same journey? Whatever the fees charged from unknown customers are there, the same fees is considered as benefit received by employee and it is taxable to the employee. Next, club facility. If club facility is provided to all employees uniformly, then not at all taxable. If club facility is provided to specific employees, only for few employees, then that club facility is taxable to employees. Whatever the club fees, every month renewal fees, whatever the expenses paid for club, all these are considered as benefit received by employee and that benefit is taxable to the employee. However, if club facility is received for official purposes, then that club facility is not taxable to the employee. Are you able to understand? Credit card facility. If credit card facility is given for official purposes, then employer has to maintain the information, employer has to give the certificate, credit card is used only for office purpose, then nothing is taxable to employee. If credit card facility is given for personal purposes, then whatever the credit card bill paid by employer, whatever the credit card fees, renewal fees paid by employer, all these three are considered as benefit received by employee and such benefit is taxable to the employee. Next, telephone facility. See, let's say mobile phone recharge is paid by Infosys only. Now, nothing. That telephone facility benefit is not taxable. Infosys, it is not doing the recharge. Infosys every month is giving 500 rupees to me for mobile recharge. If telephone allowance is given, telephone allowance is fully taxable. Are you able to understand? If any other benefit is provided, we have discussed the 16 benefits now. Other than 16 benefits, if any other benefit is provided, then whatever the actual cost of such benefit is there, that is taxable to the next. Leave travel concession is there, welfare contributions, allowances, deductions under section 16. These three I will discuss tomorrow morning. So tomorrow morning at 11 a.m. let's have one revision, quick revision. I am very glad big concept perquisites and retirement benefits are over now. We have done revision of perquisites and retirement benefits very peacefully. I hope you understood this perquisites and retirement benefits. So thank you very much. I request every one of you to attend live session tomorrow morning also. Every day, please subscribe to my channel. Please follow my Instagram or WhatsApp pages. Every day I will give you update on which concept I am going to make the revision. Accordingly, you can follow. Thank you. Bye. Good night.